Another core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet. I'm in favor of affording greater flexibility to market participants to self-custody crypto assets.
Breaking news, the new SEC chair Paul Atkins just gave an amazing speech on the future of crypto in America, and it sent the Bitcoin price soaring.
Innovation exemption could help fulfill President Trump's vision to make America the, quote, crypto capital of the planet.
Actually, all of crypto is soaring. So what exactly did the new SEC chair just say? Let me share with you the highlights of this talk and watch today's entire video, as at the end, we'll talk about what this really means for the Bitcoin price. But let's react.
Instead, these peer-to-peer networks incorporate an economic mechanism to encourage participants to validate and maintain the database in accordance with the network's rules. These are free market systems.
So already note the complete 180 of rhetoric from the old administration, Gary Gensler, who referred to crypto as a scourge on everything good, used by criminals, yet Paul Atkins refers to blockchains as free market systems.
These are free market systems where users pay demand-based fees to network participants to have their transactions included within a so-called block of data with finite storage capacity. The prior U.S. government administration discouraged Americans from participating in these market-based systems by asserting through lawsuits, speeches, regulation, and threatened regulatory action that participants and staking as a service providers may be engaged in securities transactions. I'm grateful to the Division of Corporation Finance staff for clarifying its view that voluntary participation in proof of work or proof of stake network as a miner or a validator or staking as a service provider is not within the scope of the federal securities laws.
So essentially what he just said, and why all of crypto is pumping, number one, Bitcoin mining is not a security. We kind of already knew that was going to happen, but that's good for Bitcoin. But also crypto staking, which is pretty much everything else, is not a security. Altcoin Daily has been telling you that for years, or we brought in experts who tell you that for years, but it doesn't really count until the regulator says it, and the regulator just said it.
As happy as I am over that step, this statement is not a duly promulgated rule with a force of law, so we cannot stop there. The Securities and Exchange Commission must adopt a regulation based on the authority that Congress has given us.
So he just said that they have to put the law in writing. Yes, he said it, but they have to write it down, make it official. Congress gives the SEC that power. Congress is the lawmakers. This is the regulator. And altcoins pumped because of it, because Ethereum is proof of stake. Solana, proof of stake. I'm still staking my Polkadot and a few others, but this was just the start.
Another core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet.
So self-custody of crypto versus custodial of crypto. Think of self-custody as just normal. It's regular. It should be regular. It means just you holding your Bitcoin or crypto for yourself, as opposed to custody, when you keep your coins in Coinbase. That's custodial. JP Morgan, Wells Fargo, banks custody your regular money. Because of the technology of the blockchain, individuals can finally self-custody their assets. Their money wasn't really available in the digital world before blockchain. And you would think SEC Chair Paul Atkins saying self-custody is good. You would think that's normal, but Gary Gensler and Elizabeth Warren were trying to make it illegal. They only wanted custodial. So did the crypto market. Like you, like me, this was a breath of fresh air.
The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs on to the internet. I'm in favor of affording greater flexibility to market participants to self-custody crypto assets, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking and other on-chain activities.
And again, we are watching history. This was an historic statement. And listen to how he explains this is a new era compared to what we knew before.
Unfortunately, the prior administration undermined innovation in self-custodial digital wallets and other on-chain technologies by asserting through regulatory actions that the developers of such software may be conducting brokerage activity.
So in this, he's referring to the old administration, Biden, Gensler, Elizabeth Warren, aiming to arrest coders, developers, for writing code. Should open source developers be arrested for writing code if somebody else does something bad with that code? This is why crypto's pumping.
Engineers should not be subject to the federal securities laws solely for publishing this type of software code. As one court put it, it would be irrational to hold the developer of a self-driving car liable, and here quoting from the court's decision, quote, for a third party's use of the car to commit a traffic violation or rob a bank. In those circumstances, one would not sue the car company for facilitating the wrongdoing. They would sue the individual who committed the wrong. And here just recently, the Supreme Court in a case regarding firearms underlined that particular sentiment. Many entrepreneurs are developing software applications that are designed to function without administration by any operator. The idea of self-executing software code that's accessible to everyone but controlled by no one, and that enables private peer-to-peer transactions may sound like science fiction. But blockchain technology makes possible an entirely new class of software that can perform these functions without an intermediary. I do not believe that we should allow a century-old regulatory framework to stifle innovation with technologies that could upend and, most importantly, improve and advance our current traditional intermediated model. We should not automatically fear the future. These on-chain self-executing software systems have proven to be resilient in the face of crises. While centralized platforms wavered and failed under recent stresses, many on-chain systems continue to operate as designed, pursuant to open source code.
If you feel you're getting value in today's video and you want one video a day giving you an edge in crypto, we drop one video per day keeping you informed. There's never been a better time to subscribe to Altcoin Daily. Subscribers of Altcoin Daily are smarter investors because we stay in the know.
Most current securities rules and regulations are premised on the regulation of issuers and intermediaries such as broker-dealers, investment advisors, exchanges, and clearing agencies. The drafters of these rules and regulations likely did not contemplate that self-executing software code might displace such issuers and intermediaries. I've asked the Commission's staff to explore whether further guidance or rulemaking may be helpful for enabling registrants to transact with these software systems in compliance with applicable law.
So my biggest takeaway from all this, and essentially what he's saying, is that regulation, clear regulation is coming. And for the first 15 years, this is like 1 year, this was last year, but for the first 15 years of Bitcoin's existence and cryptos, crypto went up in spite of being no clear regulation. Bitcoin was a scourge on traditional finance, TradFi, yet we thrived in spite of that. For the very first time in crypto's history, existence, we are finally getting clear regulation. This is coming right from the horse's mouth.
So while the Commission and its staff work to propose fit-for-purpose rules of the road for on-chain financial markets, I've directed the staff to consider a conditional exemptive relief framework, or let's call it an innovation exemption, that would expeditiously allow registrants and non-registrants to bring on-chain products and services to market. An innovation exemption could help fulfill President Trump's vision to make America the, quote, crypto capital of the planet, unquote, by encouraging developers, entrepreneurs and other firms that are willing to comply with certain conditions to innovate with on-chain technologies in the United States.
As I get more information, I will keep you updated. There is about 7 days left for those of you who want free VIP3 status for a month on exchange partner BitUnix. 7 days left, but you must click enter now and also potentially earn thousands of dollars in the process just for trading like you're doing anyway.